This is Cooper with FedRetirementPlanning.com, and today I'm going to review the 7 steps to choosing a TSP investment strategy. Choosing a TSP investment strategy is not something I would ever suggest to take lightly. When deciding to invest your money, it's great to know what exactly you're going into. A lot of people, they'll just look at an investment strategy, talk to somebody else, get their idea, and so they'll go into that. The problem is there's so many unique features about people, their goals, their risk tolerance, things like that play into which TSP, investment strategy they should buy into. You should never base your investment strategy solely on the opinion of others. The opinion of others, I talk to some people and they think that the G fund is the only fund that people should go into. The reason they think this is because that's the only one that has absolute safety. The problem with that is there's a lot of people that have a higher risk tolerance, or they have different goals than other people who would only stay in the G fund. Okay, so I'm going to go through 7 steps that will best allow you to identify the investment strategy for you and kind of just give you a foundational standpoint to choose from there. Determining your risk tolerance is the absolute starting point for deciding on a TSP investment strategy. This is your first step, determining where you lie on the risk tolerance spectrum. Now, everybody has a different opinion on risk. Everybody can afford to take more or less risk. It just depends where you're at and where you want to be. Now, if you haven't taken a risk tolerance analysis, this is something that I would really suggest you do. This is something that any advisor will do free for you. Through a series of questions, you'll be able to determine how much risk you can afford to take and how much risk you feel comfortable with. Because a lot of people, they'll look at their investments or they'll look at the future and they think they can take a lot more risk than they really should, based on all sorts of factors, from when you plan to retire, how much you have as far as in liquid assets, and just where you feel about losing money. A question I like to ask people when I first meet them, just to get a quick snapshot, is on a scale of 1 to 10, a 1 being I never want to lose any money ever, and a 10 being I don't mind taking my investments to Las Vegas and gambling them away and have a chance of losing all of them or have a chance of gaining a massive amount. Typically, some people lie between those two. Now, that's great for a quick snapshot. However, that does not tell you the whole picture. That's perfect for determining how you're comfortable with risk. However, when you start to look at your retirement date, you look at your liquid assets, you look at your emergency funds, things of that nature, or who's going to rely upon you or the money that you have saved up after you pass away, that's when you start to see the real picture. So I say the first step to determining what TSP investment strategy to go into is figure out your risk tolerance. The second step to choosing a TSP investment strategy is to determine your time frame for investing. When you look at your time frame for investing, it's important to look at quite a few factors, and just a few of those are, when you plan to file for Social Security, when you plan to retire, how much longer you want to be working in your current job, and do you plan on working after? What kind of life do you want to live? And that's kind of a question that I think is very important, is what quality of life do you want to live in retirement? Most people don't want to change the quality of life they live in. However, many people have to because they haven't saved enough for their retirement or they haven't contributed long enough. Okay, so determining your time frame for investing will allow you to determine, what quality of life, or I guess it would be reversed, determining what quality of life you want to live in retirement will help you decide how long you should be investing for and kind of how long you should be working for. Don't go into retirement being unsure of what your retirement is going to look like. Don't be unsure of how much you plan to make in retirement. That's obviously not a good decision and can lead to a lot of bad things, such as having to go back to work after you've already quote-unquote retired, which is something that more and more people are having to do simply because they retired too soon and were expecting to live a different quality of life than they actually wanted to. The third step is to determine your investment objectives. Why are you even investing? You don't have to invest. You don't have to take money out of your paycheck and put it into a fund for retirement. That's not something that many people require. So why is it that you're doing that? That's something that's important, and I think a base, I guess, planning technique that you need to be sure of, and many people aren't. Many people don't know what they're shooting for. However, you probably noticed that anytime you set a goal for yourself, it's much more easily attainable, and you can see where you're at on that path to your goal. Don't just invest for no reason. Set a goal out there. Say, I want to save this amount by retirement, or I want to take this amount from my paycheck each year, or I want to make this amount percentage-wise for my investments each month. Things like that. Those are things that you should shoot for. Those are things that you should track, and that will allow you to decide, what investment strategy to choose. The fourth step, and this is an easy one, determine how much investment experience you have. So look at your past. Try and see how much actual investment experience you have. Most people, when they start investing, when they start their job, that will be their start of their investment, okay? Now, some of us who have been investing for a while, you have a little bit better basis, and you probably know some of these other things, such as risk tolerance and things like that, to help you out. So, if you're an absolute novice to investing, you've never invested before, then it's certainly important not to go after just crazy returns, because you're probably going to falter. Okay, so determine where you're at as far as your investment experience, and then base your strategy off of how much actual experience you have. The sixth step, and this is a step that I think most people absolutely do not do. Okay, the first five, those were kind of just basics. The sixth one is something that I absolutely harp on to my clients, and something that you should pay attention to, and that is making sure that you're researching what you're investing in. Don't just invest in something blindly, just choosing it because the talking heads on Fox News or CNN News said that you should. Okay, you need to understand what you're investing in, which fund. Go online, look at some research, compare and contrast. Don't just go to one source and see what they have to say. Go to multiple. Okay, for instance, I have a video I did on what Dave Ramsey thought was the best TSP investment strategy. Well, that investment strategy is something that Dave Ramsey recommended to a certain person. That doesn't mean that's a blanket statement, and I'll actually link that in the bio below so you can check it out. But you need to research what it is that you want to invest in. Okay, so how's the G fund doing? How's it going to do in the future? How are the various stocks within the C fund doing currently? And what's the economic outlook for the future? Now, those are things that many people aren't interested in researching. I understand that, and that's one reason that there's investment advisors that can help you with that. Or you need to do your due diligence. Don't just invest blindly. I'm telling you, it is a recipe for disaster. The sixth step to choosing a TSP investment strategy is to actually choose. Okay, you've done your first 6 steps. You've determined your risk tolerance. You've determined your time frame for investing, your investment objectives, your investment experience. You've done your research. Now it's time to actually choose. Okay, you've laid the foundation. If you've done all those steps, you should feel confident in what you're going to invest in. Okay, so good on you if you've done those first steps. Now you have to choose. Now, this is something I want you to be aware of. Choosing a TSP fund is not final. Okay, and I actually have something here that I got off tsp.gov on the inter-fund transfer. Okay, this means transferring from fund to fund within the TSP, and this is what it states. The first 2 inter-fund transfers of any calendar month may redistribute money in your account among any or all the TSP funds, including moving your entire balance into the G fund, or the Government Securities Investment Fund. The G fund is the absolute safe fund. Okay, this is the next one. Subsequent IFTs, so any further inter-fund transfers in the same calendar month, can only move money into the G fund. Okay, so after that first inter-fund transfer, you can only move your money into the G fund. And the reason they do that, and I've heard some stories a lot of people were, rather than actually doing their job, they were focusing solely on investing in their TSP and treated it like a day trade account, and we're trading in and out of the funds, you know, hourly. Okay, so that's kind of the reason they put a stop to it, and that's what they did. Okay, the seventh and final step is to monitor. Okay, you've chosen, but that's not the end all be all. You don't just choose and that's what you're going to invest in for the rest of your life. You need to look at how it's performing. You know, if it's losing a lot of money and you're not comfortable with that, then you need to look at some other options. Okay, if you're not comfortable taking the risk to earn the reward, then you shouldn't be in those things, okay, or be in those funds. So it's good to look at, you know, all the different funds, monitor how they've done, and then compare and contrast with how your funds have done, and vice versa. If all else fails, look at the L funds. The L funds are basically weighted on when you plan to retire. They're a passive investment strategy, and a lot of people have found them to be helpful for those that don't want to do a lot of monitoring. So those could be something, you know, that you could take a look at and determine if, based on your other criteria, they meet your specifics for investing. Now finally, what I want to get across with these 7 steps is simply do your due diligence and make sure that when you choose a TSP investment strategy that you're not just choosing it on a whim. Okay, you're not basing it on other people's decisions. You're basing it solely on your criteria, on your risk tolerance, on your experience, on your objectives, things of that nature. Okay, if you have any questions, if you have any comments, please write them in the box below. I love hearing what you have to say. I'd appreciate it if you share this video. We're going to do quite a few more. If you look in the bio, I'm going to link an article that has to do with this so you can see them all step by step in a written format that you can print out and keep for yourself.